Yeah, so you got your point of release here, and you can see price comes down, breaks it. Uh, this is a very clear inflection point right here. Whether you're trading it here or trading this retest here, you can see it kind of. To go back to your question, it does have that staying power, right? You see the level gets violated, and then price comes up again. I mean, you get three trades off this level essentially, and even was this September 30th. 2 weeks later, it's still acting as an inflection point in the sense that, um, you know, when the market structure does break around, right? And this is different from this level because this level came into this area, filled this gap, not that much, but you know, uh, had filled some of this inefficiency here, reversed at this level. This is a little different, right? Because you're getting, a break of structure here. Higher time frames are starting to continue, but at least on the time frame that we're on, this level is very clear pivot on the market. See if we can. Yeah, you get the
Yeah,
same.
for some
Sorry, go ahead.
I was gonna say, for some reason, I totally misunderstood what the point of release was. Not totally. I understood the idea, but I was putting it as like where it broke the consolidation level, and I was marking that as like the point of release. Well, that comes from me trying to blend ICT and then learning Lori as well. So I
Yeah,
know I
I
watched
mean,
all those
the thing.
explanation videos.
Well, the thing is, like, people. A lot of times when people are trying to explain the idea, they'll purposely make it more complicated to sound like they're some secret person who has all the information that nobody else has.
Yeah,
But I mean, really, all the point of release is just the area in the market where a ton of bids hit the market at the same time, right? Maybe
gotcha.
someone gets on the phone and so anybody could call a super rich billionaire could call their broker at any moment and say, I want to buy $1 billion worth of Bitcoin,
Yeah,
and those bids are
yeah,
going to
that would
hit.
create some.
Yeah, and those bids are going to hit the market depending on at a certain level. And the idea is that you can't hide that, right? It's going to be reflected in price. And the corollary to that is that whatever area in the market where those bids did hit the market, that level is going to be defended essentially, right? Not only by the person who placed the bids, but other people who have in market participants who have a psychological connection to the level, right? Because anytime volatility expands, there's a psychological shift that happens in the market, and the market is psychologically sort of anchored to the area prior to the expansion, if that makes sense. So not only is it the whatever billionaire who hit the bids, but there's also all the market participants have their psychology anchored to this area in the market where prior to the volatility expansion. Um, and if you're like a new trader or a beginning trader, that's going to be the area where the market's giving you. If you're on the wrong side of the trade, the market's giving you an opportunity, to manage your risk in those situations. When price retraces like that, if you're in a losing trade, and obviously you're not going to take it, right? So but that's the general idea. You can see here, like point of release is lost, and then you have again, it's not a home run trade, but it is a very significant level. And these levels, they have staying power, right? Um, test it, test it. It's broken, comes down, and it's not so much these, right? But you have your point of release broken, sets a high, comes up, inflection point, breaks, comes down, hits the high, comes down, hangs out there. Um, Now, to kind of tie back into what we were talking about, like the difference between vertical accumulation and an apex, right? Like, say to spell that out, let me find an example of vertical accumulation on the 4 hour. Okay, yeah, you have well, very clear level here, right? I mean, this is very aggressive right here, but you it's just like how do you look at the market here, and how do you identify that this is going to continue, right? Because you have this. Maybe you're looking at this and thinking it's an apex, right? You ran liquidity here, you ran above here, and came back into consolidation, right? It's kind of the same pattern you got going over here, right? Where price, break structure comes up, runs above, comes back down, and then uh, pukes. Well, essentially, I mean, I think time is a major element of it, you know, and so like if the more time price were to spend here um, after breaking these highs and then coming down, it becomes more of a cautionary tale as it spends more time doing that. But also, if you
Yeah,
were
I
to
see.
go on the low time frames, right, this kind of remained in the higher area of the consolidation here. I didn't really, right, if you're looking at this as like a shelf pause or price pause, it didn't really reach that level. It didn't start breaking structure really on any time frame. So it didn't really give you that. But then here, you have a very, this is what you look for, right? Just the break and then come down, clean test the highs, break again, clean test, come down this area right here, clean test. And again, it's one of those situations where yeah, so like right here. So okay, so you have here's another good example. So you have this area here, this vertical accumulation. Essentially, if you were to go on the lower time frames, this would be more distinct, right? This would be a price swing within a price swing. It would be very clearly on like a 15-minute chart that you have a volume base here, price runs up, comes back, hits it, runs up again, comes back, hits this high, runs up, and then it runs up just above these highs, comes down, right, and then hangs out at these levels. Now, then you ultimately get a break of this low, but it's coming down to this distinction, right? So whenever you have this lower distinction here, and price is also running liquidity, that's very confluent. I like that type of setup because you're essentially price is very bullish on the high time frames, right? If you were to go to a daily or weekly, it's an uptrend, even monthly. Um, but you're on one hand you're knocking out people who have their stops here, but you're coming down and getting pulled um, in that sense. Now, so to the signs that it like price is not going to continue whatever trend, it's going to put in that apex reversal. One thing that is important is that the more price spends, more time price spends sort of hanging out at the support is actually it's not a good sign if you see that. I'm trying to find a good example of that after price. But yeah, I mean, essentially, like if you,
I know what you're saying, though. Yeah, I've recently started to kind of identify that and use that to help make decisions. If it shows, because to me that's kind of like weakness if it's just kind of hanging right around that area
yeah, like
and not, not doing anything off of it. There's no interest.
again, you have like a situation where we're always looking at something in hindsight. But if you were trading this live, right, there would be support here, right? So when price comes down and hits it, maybe you traded that. You see this level here, but if you don't see like an immediate reaction off that level, right? If price just sort of hangs out there, and we can definitely find a better example of that. Here's a good example, right? Where you know price essentially, so we kind of covered this in the prior video, but we noted the high time frame level here based on the weekly to the left side of the chart, comes down, bounces, and a little bit of a downtrend, then a little peak up. Then we have our point of release we marked here. Point of release gets lost, inflection point, and then but then you also have right the high time frame support that price has been operating off for. Let's see. Basically, this is in December's entire price action, which doesn't sound like a lot when when we're mentioning it now and we're just looking at it. But if you're trading it live every day, it's a long period of time, which makes sense is a high time frame level, right? If it is lost, it's going to take its time. It's not going to play out instantly. But once you sort of see the level work like this, and then price comes down to it and hangs out at that level, that it's just not the time spent at support is not a great sign. And to the on the flip side, you'll typically see this pattern. If price hangs out at resistance, on the contrary, like a macro resistance, it'll typically put in the same pattern. So that's a way to incorporate the element of time, right? If you were, um, framing a long bias off this level, you start to see this signature. Probably time to start managing a little bit of risk before this happens. But I can pull up an example of this, and there's a very clear example of it here on this breakout on Bitcoin. Right, so you get this level here, and price is coming up to resistance, and it's just kind of putting these just these days of vertical accumulation here, right? Just like 1, 2, 3, 4, 5, and it's just like pushing higher, just sort of grinding at resistance, right? But taking its time too. If this is the area in the market where people who are bearish and who are of the wrong mindset at that particular time, they are being lured into the market here, right? Because they're looking at this and they're thinking, well, it's at highs, it's it's spending too much time at the highs and it's going to break down, right? Well, of course, that's the exact wrong way to look at it too. Let me try to find another level.
Yeah, I used to think that way, exactly what you were saying. Like when I first started, it sounds like it makes sense when you think about it,
Yeah, I mean, it sounds like it makes sense, but it doesn't. I mean, you get the same level here, right? Or the same type of. This is what I mean when I talk about like vertical accumulation. Like if you see this, that is massive, massive accumulation right here. What's happening here is like running liquidity above here, but it's like it's not hitting the gas or hitting the bids right away. It's getting. This is where people are, getting lured into the market, enticed to take the wrong side of the trade, and that's kind of like it has this like a smokestack formation, right? Like a initial run above the highs, and then it sort of just billows out this way for a good deal of time, right? It doesn't look significant because there's not a lot of volume here, but from a time perspective, it's more significant than this, right? So if you're trading this, it feels that way. Like this is 6 days of price action as opposed to 1 day. So that's an important thing to keep in mind. And then you can see, right, you have your point of release here, or even here. But big one right there. When that's broken, then it becomes an inflection point. Of course, price doesn't reach it exactly here, and it doesn't have to reach it exactly. I mean, it's. I would consider this a test of this level, even though it didn't hit it directly. Let's see. See if we can find any point of releases on the daily. Yeah, I mean, here you got your point of release right there, right? Price runs up. I don't know if you guys were trading this that day, but it was a wild fucking day. Comes up, hits your point of release, bleeds down, um, takes out these levels. And that level did act like as an inflection point briefly. Um, so this doesn't look like much, but it's a very tradable distinction, right? Um, if you were this is a couple days in here, so you could have entered multiple hourly based trades on a retest of this level and drive lower, take a profit below these lows. But the idea is that you want to be taking profit, and a lot of times when the point of release is lost or price comes up and retests it gives you multiple options or multiple attempts to get back in. And in this case, it didn't ultimately break down, right? This inflection point. What you have here is a head and shoulders pattern. This is actually a very, very textbook head and shoulder pattern. Let's see. I don't have volume on my chart. I haven't had volume on my chart for a while, but I think I'm going to have to put it on for a second. Yeah, so here you basically have this. If you are trading head and shoulder patterns, the volume distinction is very important because you want to see three drives, and first drive has the highest volume, second drive has the lowest volume, third I'm sorry, first drive has highest, second has is lower than the first, and then the third is lower than the second, and the second drive is lower than the first in price, and the third is a higher low. So you get this swing low surrounded by higher lows. Sorry, you have a swing low surrounded by higher lows on declining volume. That's important. If you don't have you don't have a head and shoulders pattern. And then ultimately you get this break here. It's probably this level here, right? Maybe if you're looking at a 4 hour, but here you can see this. You have this daily high here, and then price comes, breaks it. So you have this declining volume pattern. Price comes up, breaks it, and then you get the volume coming in. So that would probably be a point of release here, right? Because you get your volume flush. Ultimately, didn't work out for you really, but again, it did offer an inflection point, right? If when price returned to these levels, if you're taking a short. This is another good example of if you were trading this, you could have marked that, and then you have your point of release here as well. So both became inflection points upon retest. Now, a lot of people were probably looking at this after this move happened, and again, going back to not taking profits properly. They were looking for another move like this, right? Where just don't be greedy. I mean, price came up to 6,900 and came down to 5,800. I mean, that's like a 20% move. You can't really ask for more than that. Then it came up again and hit this level and went from 7,300 down to 6,600. Again, that's like a 10% move, 12% move. That's more than enough to make a living. Again, just you always, you don't want to be picking tops and bottoms, right? You got your tradable price distinctions. You pull profits in. That's all you can ask for, right? Ultimately, I would argue that you want to be pulling profits in here or taking these shorts so you can acquire more Bitcoin, right? On the macro, you sort of have the it's a land grab, right? Everyone is in the business of acquiring as much Bitcoin as they can, as quickly as they can, before all of them run out. I think if you spend enough time in the market, that's kind of where you wind up.